Welcome. We are going to discuss question 2 of the April 2022 CPA paper. Question 2 of the April 2022 CPA paper, and it's a question on partnership. So Jack and Nina were operating a shop dealing in designer bags as partners, sharing profits and losses in the ratio 2:1 respectively. On 31st March 2021, they admitted Maria to the partnership. The partnership deed provides for interest on capital at the rate of 10% per annum. The balances as per the partnership's books of account as at 30th September 2021 were as follows. So office building, purchases, sales, motor vehicle, salaries and wages, accumulated depreciation, inventory, furniture and fittings, accounts receivable, bank, partners capital accounts, current accounts, consultancy fees, rent, rates and electricity, general expenses, accounts payable. Additional information: on admission of Maria, the profit sharing ratio changed to Jack 2/5, Nina 2/5, Maria 1/5. For purpose of admission, goodwill was valued at 12 million and was written off the books immediately. Sales for the period to 31st March 2021 were equal to 2/3 of sales from 1st April to year end. On 1st April 2021, Maria paid 5 million, which comprised her fixed capital of 3.5 and her current account contribution of 1.5. Apportionment of gross profit was to be made on the basis of sales, while for expenses is based on time unless otherwise indicated. On 30th September 2021, inventory was valued at 5.1 million. Allowance for depreciation on motor vehicle and furniture and fittings is at the rate of 20% and 5% per annum, respectively based on cost. Salaries included the following partners' drawings during the year: Jack, Nina, Maria, those are the figures. As of 30th September 2021, rates paid in advance amounted to 60,000, while electricity accrued amounted to 60,000. Doubtful debts for which full provision was required as at 31st March 2021 amounted to 120,000 and 160,000 as at 30th September 2021. Consultancy fees included 200,000 paid in respect of acquisition of office building. These fees are to be capitalized as part of the building. The building is estimated to have a useful life of 25 years. Required: statement of profit and loss for the year ended 30th September 2021 and statement of financial position as at 30th September 2021, then partners' current accounts. Now, this is a question on partnership and specifically admission of a new partner into the partnership, and of course we are required to come up with the income statement, then the statement of financial position and the partners' current accounts. So we'll straight away go into the question and see how it goes. So we'll call it Jack, Nina and Maria partnership. Jack, Nina and Maria partnership. Income statement for the year ended 30th September 2021. Shillings, shillings, and shillings. It's good to restrict the zeros. And we start with the trading account. Trading account normally will have the sales less cost of sales. Just as simple as that. So for this case, because we'll have the dates that we have in question are that 1st March 2021, there was a new partner who was admitted. This is March, and this is September. We are coming up with the books of up to September. So our year starts in October to September of the following year, 2021. So mid of that year, that is March 2021, there was a new partner who was admitted, that is Maria. So simply put, we have 6 months, 6 months. 6 months, 2 partners ran the partnership. Then the remaining 6 months, the partnership was run by 3 partners, having admitted Maria. So we might have to change our format a little bit just to capture that new information that is key. So under I think let's have like a 6, because we'll have the first period where the partnership was run by 2. Then we'll have the second period where the partnership was run by 3 partners. And then we'll have the third period where we'll show the totals for that particular year, which is actually very important because you are coming up with the books for the whole year. So that is very important. So sales, look at it from that angle. So Jack and Nina were operating a shop dealing in designer bags as partners, sharing profits and losses in the ratio of 2 to 1 respectively. On that 1st March, they admitted Maria, and interest on capital is 10%. So sales is 35,000. Let's look for any workings, any possible workings on sales. Sales is 35,000. Sales for the period, there is an additional information here that touches on sales. So sales for the period to 31st March were equal to 2/3 of sales from April to year end. Do we have any other information that affects sales? There's no any other information. So this is only working on sales. So let's read it again. Sales for the period to 31st March 2021 were equal to 2/3 of sales from 1st April to year end. A bit tricky. So sales for the period to 31st March were equal to 2/3 of sales from 1st April to year end. So if the sales from 1st April to year end, let's say sales 1st April to year end, this one, let's assume the sales from 1st April to year end is X. Then sales for the period to 31st March were equal to 2/3 of this. So the first half is 2/3 of X, and then plus X. This will give us the total sales, which is now 35,000. I think that is the best interpretation we can have. Let's read again. Sales for the period to 31st March were equal to 2/3 of sales from 1st April to year end. Yeah, 2/3 of sales from 1st April. So this is correct. This is the first half. This is the second half, and the total sales was 35,000. Just confirm the figure. Sales 35,000. So this will give us, if we add this, this is 1/2/3 x is equal to 35,000. So this will give us, sorry, this is 2/3. 1/2/3. 1, 2 over 3 x. So this will give us 5 over 3 x is equals to 35,000. So that we multiply by 3. This will give us 5x is equals to 175,000, and then x will be equal to 35,000. So this takes us back to the same position we were. X is equal to 35,000. That takes us back to the same position we were. So this is just create some space here. So this will be 5x is equals to 35,000 times 3. That gives us 105,000. Then divide by 5 both sides. X will give us 105,000 divided by 5. That gives us 21,000. So x is 21,000. That is the second half. X was the second half, and it has given us 21,000. So sales second half will be 21,000. The total sales is 35,000, and this leaves us with the sales of 14,000 for the first half. And it was actually from the question, we've been told that the first half, how many units were sold? Sales for the period to 31st March were equal to 2/3 of sales. So 2/3 of 21,000. It was actually captured here. We said it's 2 over 3 of x. So this will give us 7,000. This is 14,000. So that's how we interpret that. So the first half 14,000, second half 21,000. The total is 35,000. So then we go to purchases. Sorry, less cost of sales. Less cost of sales. So cost of sales is opening stock plus purchases minus closing stock. So opening stock will normally find it in the trial balance, and it's here. Opening stock 4,800. This is for the entire period. So opening stock 4,800, will have it on there. Then we add purchases, unless if we have some explanation on how it will be distributed among the two different periods, we may just use the total figures. So opening stock 4,800, then purchase is 16,700. Let's look for any workings. Purchase workings. Any workings on purchases? It is on sales. Maria. So there is nothing so far on purchases. So I'll pick it as it is. Purchases 16,700. Purchases 16,700. Then we go to closing stock. Closing stock normally found on the additional information. So closing stock on September 20, inventory is valued as 5,100. Remember, we have restricted the zeros. So 5,100 less. So this is 48 plus 16,7 minus 51. That gives us 16,400. 16,400 less from 35,000. What do we have? Minus 35,000. We have 18,600, and this becomes our gross profit. So this gross profit, we can simply, in fact, what we do here, we now distribute this to the two other financial periods, and we'll go with the same ratios that were used for under the sales. Actually, it has been captured in item number 4. That apportionment of gross profit was to be made on the basis of sales, while for expenses is based on time unless otherwise indicated. So since we are still in the trading account, we'll just stick to the basis of sales apportionment. And so this 16,400 will take the relationship here is basically 2/3 and I think 0.6. This is 21,000 divided by 35,000. I'm trying to get the proportion here, 0.6. So we'll simply take 0.6 times 16,400. That is the cost of sales. So we have 98.40 as our cost of sales. And then the other side, 14,000 divided by 35,000. That gives us 0.4 times 16,400. That is 65.60. So 65.60 as our cost of sales. So when we less this, we get the gross profit, 14,000 minus 65.60 is equal to 74.40. So 74.40 for the first period. This is very important because at the end of the whole thing, we are going to compute the profit for the two partners, and we're also going to compute the profit for the three partners, so that we can be able to determine how much each of them took home as their rightful earnings. So we have to get it right from the very beginning, especially the gross profits, and then move all the way to the apportionment of the net profits. So that's why we are struggling to get these figures right here. So the second period will be 21,000 minus 98.40. We'll get 11,160. 11,160. It goes without saying that when you add these two, you should be able to get the total. And just write that one out, 18,600. So that explains everything. We cannot be able to apportion the opening stock. Once we have apportioned the cost of sales, it's enough. So these are the gross profits, and we are good to go. So we check around if there are any gains or other incomes so that we can add. And if we don't have any, we go straight to the expenses. So check discounts received, commission received, rent received, gains on sale of capital assets. We talk of reduction in allowances for bad and doubtful debts. Doubtful debts for which provision was required. These ones they are creating, so it's not there. Okay, so we can safely assume that there are no gains, no other incomes. So we go to expenses, and we'll start picking the expenses right from here. These are capital. Salaries and wages, we have salaries and wages 7,400. So salaries and wages 7,400. Check additional information. Yeah, we have salaries and wages. There's something here. So salaries and wages. Salaries and wages. Now, there's something again on this in terms of apportionment between the two periods. We've been told that all expenses are going to be apportioned based on time. And here we are talking about 6 months, 6 months. So it's basically half-half, unless other is indicated. So expenses will follow that rule. Divide every expense that we incur by half. So for salaries and expenses, the Salaries included the following partners' drawings during the year. Now, partners' drawings are not supposed to be included under salaries, so we are going to get rid of them. So salary figure was 7,400, and then the partners' drawings are that is 600 plus 480 plus 250. This is 1330. So 7,400 minus 1330. Since we don't have working space, 1330 minus 7,400, this gives us 60, 70. 60, 70. So divide by 2, because we are talking about 2 different periods here. So salaries and wages, 30, 35. Salaries and wages, 30, 35. Salaries and wages, 60, 70. That's how we go about it. We have divided salaries and wages into 2. 30, 35, 30, 35. The total is 60, 70. How have we gotten 60, 70? The salaries and wages of 7,400 minus the partners' drawings. Drawings are not supposed to be included in salaries and wages. So when you less this from this, you will get 60, 70, and you divide by 2, get 30, 35. So that's the working for salaries. Okay, so let's move on. Got the second item. Accumulated depreciation, will come back to depreciation later. Inventory, furniture, accounts receivable, all these are balance sheet items. Consultancy fee, this one could be these are an expense, but let's see if there's anything on it. Consultancy fee, I think there was something on it. Yeah, it's here. So consultancy fees included 200,000 paid in respect of the acquisition of office building. These fees are to be capitalized as part of the building. The building is estimated to have a useful life of 25 years. So 200,000 has been included here, but it was for the acquisition of office building. So basically, we take the consultant's fee of 420 minus 200. 200 will take it to the building. So 420 less 200, you have 220,000. So consultancy fee, the figure is 220, but we have to apportion it to the 2 different time frames, to the 2 different periods. So you simply divide by 2 and you'll be able to get that. Now let's move to the next one. Rent, rates, and electricity. This is of course an expense. Rent, rates, and electricity, 1240. We'll come back to it. Let's just write it here. Rent, rates, and electricity. So the figure that we have here is 1240. So the figure we have here is 1240. I'm checking around if we have any rent, rates, and electricity. There we go, number 8. As at 30 September 2021, rates paid in advance amounted to 260. Rates paid in advance. So all the prepayments normally we add because they are already part of this year's expenditures. So rates paid in advance amounted to 260, while electricity accrued amounted to 60,000. Accrued electricity amounted to 60,000. As at 30th September 2021, rates paid in advance amounted to 260, while electricity accrued amounted to 60,000. Okay, so these are rates prepaid. These ones have been prepaid for the following financial year. So it means we are going to less, not to add, because it's not from the previous year, it's for the following year. So this is not part of this year's expense, and then the accrued will be part of this year's expense. Depends with which advance we are talking about. So if you are saying advance for the following year, then in that way we'll have to less it. But if it's if it was paid the previous year for this year, then we'll have to include it. So this one was paid for, just read it again, as at 30th September 2021. This is at the close of this year. Rates paid in advance amounted to 260. So they were paid, yes, but not for this year. So we get rid of them. And then electricity accrued. They are for this year, but they have not been paid. So we are going to add 60 and less to 60. So this will give us, basically it's 1240 minus 200. So this will give us 1040. So 1040 divided by 2 would have 520, 520. So this will be 1040. So we have 520 here and we have 520 there. So we've simply added the accrual and deducted the prepayment, because the prepayment is not for this year. The accrual is for this year. Prepayment was for the following year. So you've gotten rid of it. Okay. So then we move on. General expenses, 1410 for 6 months to 31st March 2021. The total general expenses was 2520. So 2520 minus 1410, because 1410 is for the first 6 months. So we have 1110. Unless if there is any other working on general expenses. So just check. Looks like there's not any other working. So we'll simply come here and say general expenses. General expenses 1410. And then this side 1110. The total is 2520, like that. Then what next? What next? What next? So we are done with this. Accounts payable is a balance sheet item. Then we go to number 1, additional information. Nothing of use here. Number 2, we've already factored that. Number 3, there's nothing important here now. Apportionment, this one, Number 5, inventory. Number 6, allowance for depreciation on motor vehicle and furniture is at the rate of 20% at 5% per annum, respectively, based on cost. So depreciation, motor vehicle and furniture, we'll pick that. Depreciation, motor vehicle and furniture. So for motor vehicle, all of them are on cost. Allowance for depreciation on motor vehicle, 20%. So 20%, let's go to value of motor vehicle on cost, 34. So 20% of 34 is 680. So depreciation is 680. There's no need to go to the accumulated because it's on cost. So 680, 340, 340. Then we go to furniture. Furniture allowance is 5% per annum. So furniture, we go to the value of furniture. Furniture 1200. So 5% of 1200 is 60. So the depreciation will be 60. Furniture 60. Here we have 30. Here we have 30. Good. So we are done with that. There's something also that possibly we need to factor in here. Now that we were told something about the building have a useful estimated life of 25 years. So there was 200,000 here to be added to the buildings. So let's get the value of buildings. Buildings is it was purchased in 1st October, 6,000. So plus 200. You remember that 200 that was included in the consultancy fee, 6,200. And we've been told that the building has estimated useful life of 25 years. So 6,200 divided by 25. That gives us 248. It means every year it will be depreciating by 248. So we'll come here. They don't have to tell you directly before you can apply the depreciation. So buildings 248 divided by 2, we have 124 and 124. So that one is also well captured. It was quite tricky. Anybody could have left that one out. But it's okay now that we have seen it. The next item, where are we? Depreciation, salaries, we've already tackled that. Rates, we are done with that. Doubtful debts, for which full provision was required, as at 31st March 2021 amounted to 120, 160. This is just 120 and 160, and they've already worked it out for us. So provision for bad doubtful debts, they have told us 120 for the first half and 160 for the second half, which gives us 280. Let me just confirm the figures again. 120 and 160 totaling to 280. So let's move on. This is consultants fee, and I think we are done with that. So we get the total. Let's start with the totals first. This farthest end. So this will be 6070 plus 220 plus 1040 plus 2520 plus 680 plus 60 plus 248 plus 280. This gives us 111 118. 11 118. So that gives us 11 118. So we'll bring this 11 118 here. These are expenses. Minus 18 600. We have 7482 as our net profit. So it will mean we have to also to take the total here. 3035 plus 110 plus 520 plus 1110 plus 340 plus 30 plus 124 plus 160. This gives us 5429. 5429 minus 11160. 5731. Then the other side, because the figures are a bit different, we'll have to go the long way of adding all these things. 340 30 124 120. That gives us 5689 minus 7440 1751. And I hope if you test your arithmetics, you should be able to get the same figure that we have the other end. 5731 plus 1751 7482. Good. So we are good to go, and this becomes our net profit. This is our net profit. So we go to the third stage, which is a bit crucial here, because now I want to start dealing with the partners directly. So if we have any interest on capital, salary, there were anything that like interest on drawings, interest on capital, such like stuff, those are the ones that will come under the apportionment and even the profit and loss distribution. So that is what we want to do next. So let's go back to the question and see if there's anything that will lead us into that. Jack and partner, okay, these ones were sharing profit the ratio 2:1. The partnership did provide for interest on capital at the rate of 10% per annum. Now, for interest on capital, we will be forced to come up with what we call the partners' capital accounts. For us to be sure of what we are doing, let's just come up with the partners' capital accounts. And in fact, we can also come up with the partners' current accounts at this particular point. Though I know it is a question that has been asked later, you can still do it now just to be for convenience. So this is partners capital accounts, and we have Jack, we have Nina, and we have Maria. Jack, Nina, and Maria. We are still going to assume the respective zeros. So partners capital account 3,000, 2,000, 3,000 and 2,000. Initially, we are interested, there are two different things here. Jack and Nina, 2 to 1. And then they admitted Maria. And Maria came in with the total capital of 5,000, 3,500 fixed capital, and current account 1,500. So what we are going to do is Jack and Nina 3,000 and 2,000. That's the balances that we are going to start with. So these are credit balances. Balances carried, balances brought forward, 3,000 and 2,000 respectively. And then admission of Maria. Now she was required to pay 3,500. So that's how we record that. On admission, she was required to deposit 3,500, which she did as per note 4. That's the starting balance. Then additional information number 1. On admission of Maria, the profit sharing ratio changed to 252515. For purpose of admission, goodwill was created, valued at 12 million, and was written off in the books immediately. So this goodwill, 12 million, remember, it is the work of the two partners, so they will enjoy the goodwill. So we simply distribute the goodwill to them. When creating, we distribute to the two partners in their profit loss sharing ratio, and they were sharing profits in the ratio 2 to 1. So it means one will get 2/3, the other one 1/3 of 12,000. So this is 8,000 and 4,000 respectively. So goodwill, it adds on their wealth. Anything that adds on the partner's wealth is credited. And then of course we have created, and now we have to write it off. So goodwill written off, it will now be the 12,000, but now the new profit loss sharing ratio is 2/5, 2/5, and 1/5 of 12,000. So this is 2 divided by 5 times 12,000. That gives us 48. So it means this one will get 48, and then 2,000 what? 2,400. So we've created and written it off immediately. So it's only goodwill that is likely to affect the capital account, unless if we have anything else, but chances are that we don't have anything else. So just to confirm, I really doubt if we have anything else here. We don't have anything. There's nothing alarming. Interest on capital, that will go to the partner's current accounts. So let's close this book. The side with the highest figure will take the day. So get the side with the highest figure. Definitely this side looks like the credit side has the highest figures. So 3,500. So 11,000, 6,000, and 3,500. So this will be 1,100. This is 1,200, and this is 6,200. I'm taking, look, basically the difference, 11,000 minus 48 will give you that, and this becomes our balances carried down. Balances carried down for partners' capital accounts. So then it becomes a little bit easier for us to compute the interest on capital. So interest on capital. So for the first part, it was 10%. Remember, interest on capital is 10%. So 10% of their capital, 10% of Jack's capital is 300. But remember, this only applied for the first 6 months. So it's 10% of 300, which is 10% of 3,000, which is 300, divided by 2, so that we get the first part of that. So it's 150. And then let's just finish with this. For Nina, the capital is 2,000, so 10% of 2,000 is 200. And because 200 was for the whole year, because it's 10% per annum, this is what we are talking about here. The partnership deed provides for interest on capital at the rate of 10% per annum. So 10% of 2,000 is 200. But because they were only in partnership with that arrangement for 6 months, then we divide by half. So 200 divided by 2, we have, or by 6 over 12, we have 100. So this is 100. Now this time round, we're not going to have it the other end. So this is partner Jack. This is partner Nina. The first half. The second half, they will still enjoy the interest on capital at the rate of 10% per annum. But now the new capital rates are as follows. We'll get them from the partner's capital. So it will be 10% of 6,200. That is 620. And then it's only restricted to the remaining half of the year. So 620 divided by 2. Rather 6 over 12. That is the second half of the year. Because that's when they were 3. This partner's capital balances only apply from mid of the financial period to the end of the financial period. So 6,200 times 10%, 620, divided by 2, 310. So this is for Jack, 310. Then for Nina, it will be, this is 1,200 times 10%, 120, divided by 2, 60. So for Nina is 60. And for this one, who is it? Maria. 1,100 times 10% interest on capital, that gives you 110. Then 110 divided by 2, because we are interested in the last half of the year, or times 6 over 12, which is basically half. So that will give us 55. And now this is the new partner, and this clearly shows what we mean here. You can see the first half, Jack enjoyed 150, the second half 310. First half, Nina enjoyed 100, second half 60. Third half, Maria, the first half, Maria was not there, so she's getting nothing, and the second half she has only managed to get 55, which is 10% of 1,100, which is her capital figure balance. And because it's only for the half of the year, we divide by 2 to get 55. So then let's get the totals. This, we add this to this, we have 460 here. This one we have 160. Then here we have 55. When you add this, you should be able to get the totals. Here we have 250, and we're deducting from this. This one is 370, 425. Deduct that from that, and this will give us 620, 675. Deduct that from there. If you add these two, they should give you this, which is actually the position. So let's and where are we deducting? So we get the balances. It's these balances that you are going to distribute to the partners in their profit loss sharing ratio. So 1751 minus 250, we have 1501. Now we don't need to write it here. You because there's nothing else, you may want to write it down here. I will show you why. Then for 5731 minus 425, we have 5306. And then finally 7482 minus 675, we have 6807, which basically should also be the total when you add these two. Yeah. So this is where we are. So the next thing is profit loss sharing. Profit loss sharing among the partners, and we have partner J, partner M, partner N. The total should now come to this. So the first half, remember, we didn't have partner. We didn't have, sorry, this is N and this is M. The first period, we didn't have partner M. And partner J and N were sharing profits in the ratio 2 to 1. So this one will get 2 over 3. This one will get 1 over 3 of this amount. So 2 over 3 of 1501. 2 divided by 3 times 1501. That gives us 1000.66. So let's just put it the way it is, 1000.66. Then this one, of course, will be 500.34. So when you add the two, you get 1501. When you add the two, you get 1501, like that. 1501 less, you get 0. So we have already distributed the first financial period as profits to the two partners. I think we need to just, let's leave this space. So what we had written initially will stand. So let's leave this space. So the total is 1501, like that. Okay, so then we go to, we have distributed that. Then now we want to distribute this 5306. And how are we going to distribute it? 2 over 5 will go to Jack, 2 over 5 to Nina, and 1 over 5 to Maria. As per the profit loss sharing ratio, it is captured in item number 1, additional information, 2 over 5, 2 over 5, and 1 over 5. So you simply come here and say 2 over 5, 2 divided by 5 times 5306. This gives us 2122.4. So 2122.4. Definitely this one will also be 2122.4. And then this one will be 1060. Let's just do it. It will be 5306 divided by 5. 1061.2. Yeah, 1061.2. That will give us 5306. That's the total. Then when you less it from the original figure, we have 0 here. So that's how it goes. That's how it goes. That's how it goes. So let's add this. Let's add this. This is 1000.6 plus 2122.4. 3123. I'll choose to ignore those minor zeros. 3123. Then the second part will be 500.3 plus 2122.4. That gives us 2622.7. 2622.7. Let's call it 2623. I hope this will not be an issue at the end. 2623. Then finally, let's have this partner as 1061. 1061.2. But let's ignore the 2 because we have so that's how it is. If we add this, we should be able to get that 123 plus 2623 plus 1061. This gives us 6807. Yeah, 6807. When you less from that, you should also be able to get 0. So we have ideally we have distributed all the profits to these partners, and this is their take home. Partner J will take home 31.3, partner N will take home 26.3, and partner M will take home 1061. We've basically added what they'll get from each of the two periods, when they were 2 and when they were 3. So we are done with the appropriation account. The next thing now is to check on, come up with a financial position. So we'll again say Jack, Nina, and Maria books, and then say statement of financial position, statement of financial position, for the year ended. No, this is now as at, because it's a financial, it's a balance sheet, as at 31st. When was it? 31st? Is it September? September 2021. As at 31st September 2021. So we go straight into the basics. Shillings. We start with the non-current assets. I still remember some of them. We have buildings, we have motor vehicles, and we have furniture and fittings. So let's go. For buildings, we had I think it was 620. Remember, office buildings 6,000, and then plus the 200. 6,000 plus 6,000 plus the 200. 6,000 plus the 200. This 200 was the one that had been included in the consultancy fee. So it becomes 6,200. 6,200. Buildings 6,200. And we said the depreciation was 248. So 62 minus 248, we get 5952. 5952. Then motor vehicle. The figure is 3,400. Accumulated depreciation 12. So 34. Motor vehicle 34. Accumulated depreciation is 12. 1,200 plus the depreciation for this year. So 1,200 plus 680. 1,200 plus 680. That gives us 1880. 1,200 plus 680. 1,200 is accumulated, 680 is the depreciation for this year. So 34 minus 1880. This gives us 1520. The 680, I've just simply gotten it from our workings, the P&L. It's here. This is where we have the 680, this one. And then furniture. Furniture accumulated depreciation is 400. But the value of the furniture was 1,200. So 1,200 minus 400. And then this year the furniture depreciation, furniture 60. So we have 1,200 plus minus 460. 400 accumulated, 60 for this year. So 1,200 minus 460, we have 740. So let's add this. 5952 plus 1520 plus 740. That gives us 8212. So then let's move on. Hope this space will be enough. So current assets. Let's get the current assets. Inventory, this is opening. Accounts receivable, we have accounts receivable here 900, bank 9280. So accounts receivable 900, accounts receivable 900, then bank we have 9280, Let's go back again, pick others. So accounts receivable 900, bank 9280. The capital accounts consultancy rate. I think there was one that was prepaid. So let's get it. Allowance for depreciation, motor vehicle and furniture and fittings at the rate of not that one. So rates prepaid amounted to 60. So rates to 60 prepaid, paid in advance. So that becomes an asset to us. It's an asset to us. So rates prepaid to 60. Prepaid rates 260. Prepaid rates 260. Good. Prepaid rates 260. We'll continue with our journey. Inventory 5,100. This is closing inventory, so it features in the balance sheet. Closing inventory 5,100. So inventory 5,100. Captured it. Let's continue. So I think we are done with our current assets. Let's get the total for the current assets. This is 900 plus 9280 plus 260 plus 5100. That gives us 15,540. 15,540. Then we go to current liabilities. Current liabilities. So we had something on rent, rates, and electricity. Accounts payable for 460. Let's start with that one. That one is quite a low-hanging fruit. So accounts payable for 460. Let's finish with that. For 460. Then we go to additional information. Admission, sales, apportionment. All that we've captured. Those are drawings. Electricity accrued 60. So accrued electricity 60. Accrued electricity 60. Accrued electricity is 60. So accrued electricity 60. Then we have I think we had provisions. Yeah, doubtful debts. Just after that one we have doubtful debts. We have to create this. So these are provisions 280. Provisions for bad and doubtful debts. Provisions, bad and doubtful debts. That is 280. So let's get the total. This is for 460 plus 60 plus 280. This gives us 4,800. So less from that, what we get should be our net capital employed. So 8212 plus 15,540 minus 4,800. This gives us 18,952. And this should be our net capital employed. So let's look at the finance by section. Finance by section and see if we'll have the same figure. Finance by section. So finance by section, we'll have let's see if I can push this. I'm sorry, I think I'll have to do away with this. After all, it's not one of the questions that the examiner is interested in. so that we can create some space for this question. Let's just create some space for this question. So we'll continue this here. Financed by. We have the capital accounts, and the capital accounts, basically what we have just deleted. We had partner J, partner N, and partner M. Partner J's account was 6,200. So 6,200. Partner N account was 1,200, the balance, and partner M was 1,100. When you add the three, you'll get 8,500. Then we go to current accounts. Again for J, N, and M. Now, current accounts, we may not be able to proceed without creating the current account. So let's just create the current account here once and for all. This is the third part of the question. Third part of the question. Let's just create it now once and for all. So we create it. Current account. There we go. So this is called this partners. Current accounts. So this is JNM. Okay. So balance carried forward. Balance are brought forward. We'll check from the books. 1,600, 1,200, and 1,500. So 16, 12, and 15. So we'll have 16, 12, and 15. 1,600, 1,200, and 1,500. Remember, this was additional. So we'll have to say additional capital like that. And then we'll have to compute the interest on capital. So this is something good for them. It actually adds on to their wealth. So interest on capital. We had already calculated this, so it's not going to be an issue. So it's 460, 160, and 55. These are the figures I'm just picking from here. 460, 160, and 55. 460, 160, and 55. And then we go to, remember there we had drawings. So drawings, and we'll pick these drawings just from the question as they are. Drawings, this is 600, 480, and 250. 600, 480, and 250. So 600, remember to restrict the zeros. 600, 480, and 250. 600, 480, and 250. Those are drawings. And then something else, profit share. Profit share, we just pick the totals. Don't need to show for the individual periods. Profit share, I think we have that. They are here. So profit share, 31, 23, 26, 23, and 1061. 31, 23. You may not be able to get all those figures. 31, 23. And let's go pick the other one, just to be sure. 26, 23, and 1061. 26, 23, and 1061. So anything we've left out, I doubt if there's anything that we have left out. And if there's nothing that we have left out, so just get the totals here. Get the totals. Get the totals. For the side with the highest figure will be a balancing figure. So 1,600 plus 460 plus 3123. This gives us 5183. 1,200 plus 160 plus 2623, 3983, 1500 plus 55 plus 1061. This gives us 6599. 65. What am I adding? That can't be true. 1500 plus 55 plus 1061. This is 2616. Don't know what I added. 2616. 2616. So 2616, 3983 and 5183. So 5183, 3983 and 2616. So 2616 minus 250 have 2366. 3983 minus 480, 3503, and 5183 minus 600, 4583. So these are our balances carried down. Okay, so we carry these figures: 4583, that is J 4583, N 3503, and M 2366. 2366. So get the total: 4583 plus 3503 plus 2366. That gives us 10452. So we add this and this plus 8500. This gives us 18952. I hope that's the same figure we have up there. 18952. Good. So this is our net capital employed. So net capital employed 18952, net capital employed 18952. So that is it. We are done with that question. This is the second part of the question. This is the statement of financial position. And then this was the first part of the question, statement of profit and loss. And lastly, partners' current accounts. We have it here, partners' current accounts, this one. So that makes it the end of this question. Thank you. Subscribe to our channel, share, and you're also welcome to our school for online classes. Welcome.